Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Sanjana Prabhakar, index research specialist with Nasdaq Investment Intelligence, to discuss the Inflation Reduction Act of 2022 and the companies that are expected to benefit from it. Sanjana, it's great to see you as always. Provide us with a quick summary of the IRA and some of the companies that you expect to benefit from it.
Sure, Jill. So the last time I was here, we spoke briefly about the IRA, which was passed on August 16th. And this time around, wanted to draw your attention to the companies that would benefit from the IRA. So the initial sentiment towards the passage of the act appears to be overwhelmingly positive. And 2023 is expected to be a transition year, with all the participants awaiting more guidance from the Treasury, with benefits likely to accrue in 2024. And some of the companies that make up the sales index are likely to be beneficiaries by way of a stronger project pipeline and reduction of costs. And that's something that we wanted to draw our viewers' attention to. Also wanted to give a quick check-in on the fundamentals of the sales index.
Okay, great. Let's take a look at that first, starting with the revenue profile.
Oh, sure. So in our first slide here, we look at the revenue and margin profile of the sales index. And just to give you a quick background of the companies that make up the index, we have large automotive players such as Tesla, EV startups such as Lucid, Rivian. We have a company called First Solar, which is a provider of solar modules, a green hydrogen company called Plug Power, and On Semiconductor, which offers integrated circuits. So that gives you an indication for how diverse this index is in terms of both size and services provided. And in terms of the revenue profile, as you can see here, the sales index showed very strong growth in fundamentals, with 87% of the index weight growing revenues in 2022. And going forward, the companies that make up the index are likely to see strong tailwinds to revenues due to the secular shift to EVs, which we have all been hearing about, and also other trends such as the decarbonization of the grid, along with a boost from the Inflation Reduction Act. And about half of the revenue increase that you see in this chart here actually comes from Tesla, which controls about 2/3 of the EV market. We also have other companies in the index, such as FTC Solar, Fluence Energy, and First Solar, which are all guiding to strong double-digit growth in the next couple of years. And if you look at the margins, as you can see in the gray bar here, 74% of the index weight is tied to companies with gross margins that grew in 2022. They did not, however, meaningfully outperform the rest of the index. And keep in mind here, there was significant margin pressure from inflation, but we did see companies post an improvement in gross margin profile despite the very challenging environment in which they were operating.
What about the earnings profile?
Sure. So in this next slide here, you can see two other fundamental metrics, the earnings and the net margin. And as you can see to the slide to the left, 60% of the index weight is tied to companies with earnings that grew in 2022, and a healthy percentage, 66%, had positive earnings overall. So aggregate earnings actually grew from a loss of 3.7 billion in 2021 to 12.3 billion, to positive earnings of 12.3 billion in 2022. So that's a significant turnaround. And these companies that grew earnings largely benefited from a very favorable demand environment due to the shift to EVs and the mega trend of renewables, which we have been seeing. And as you can see with the net margins, we have a healthy percentage of index, about 78% of the index weight, with net margins that grew in 2022. And as a group, they outperformed on a relative basis the rest of the index, registering declines of 29% versus declines of 42% for the other companies. And this net margin expansion actually occurred in an environment where companies faced a number of headwinds. Things that we've been hearing about, logistical issues in China, challenges in the regulatory environment, rising interest rates, supply chain challenges, and some weakness in Europe. Margins actually trended higher than they would have otherwise, largely due to strength in EVs and a broader shift to decarbonization.
All right. And our third metric here, of course, taking a look at free cash flow, which, of course, is top of mind for investors when analyzing companies.
Absolutely. And as you can see here, about half of the index was free cash flow positive in 2022. And we think that there will be an improvement going forward with benefits from IRA likely to accrue in the next couple of years. And we have companies such as ChargePoint and Lucid Group, which make up the index, that are projected to be free cash flow positive in a few years from now. And in terms of operating margins, to the right, we see a healthy percentage of the index, about 72%, tied to companies that grew operating margins in 2022, outperforming the rest of the index on a relative basis. And again, this operating margin expansion occurred in an environment of, supply chain delays, tightening financial conditions. And what this suggests is there was significant efforts towards keeping operations efficient, despite the very challenging environment.
And finally, Sanjana, let's talk about valuation.
Sure. So in this last slide here, we see the valuation. We see companies have become cheaper on a number of metrics, including EV/EBITDA, price to earnings, EV to sales, and price to book. And note here that we are showing price to earnings of only companies that reported positive earnings. So investor sentiment does appear to be cautiously optimistic, as benefits from IRA are likely to accrue in the next couple of years. That's something that everybody is closely watching. Additionally, benefits are also likely to accrue from the NEVI program, which promises additional funding for EV charging.
All right. Appreciate the insight as always, Sanjana. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you very much, Jill.